Home Loans, and today we're going to discuss a couple of documents that are very important to understand when involved in a transaction, and those are the closing statements. And there's basically two different formats that we're going to take a look at today. One is a buyer's only settlement statement that escrow prepares, and the other is referred to as a HUD-1. And the HUD-1 is also something that escrow prepares, but it's a different format that not only shows the buyer side of the transaction, but it also shows the seller side as well. And it's on a standardized 4-page document. But basically, both documents, the HUD-1 and the buyer settlement statement, both contain the same information. I happen to find that the buyer's settlement statement is a little bit easier to follow because it's not as busy and it only concerns you, the buyer. But again, they both basically contain the same information as far as the buyer is concerned. So in this example, we have a purchase price of $220,000, and you'll see that here, and that's under the debits column. Okay, and basically there's two columns. There's a debit column and a credit column, and the debit column includes items such as the purchase price of the home, all of the fees, escrow fees and title insurance fees and lender fee and appraisal fee, any taxes that are owed, any recording fees. That's going to be on the debit side of the document. On the credit side, the credit side contains any money that you would bring in, such as your initial deposit, such as the final funds that you would bring in at the time of closing, the remainder of your down payment, any credits from the seller, any credits from your agent, or any credits from the lender would be on the credits side of the ledger. So all of these debits and all of the credits have to basically, at the end of the day, equal each other. So all the money in has to equal all the money out. And basically that's all this is this settlement statement is just an accounting of monies in and monies out. And so let's go step by step and start at the top. So we have a purchase price of $220,000, okay? And this buyer made a deposit of $5,000 at the opening of escrow. Then we have a new loan of $176,000. So the loan is going to be a credit in this instance, okay? And then we have fees. These are lender fees, $1,465. The appraisal fee was $385. We have another appraisal in this instance of $40. We have some interest that is owed of $124. What this is, this $124.67, this is prorated interest. And you're going to become familiar with this issue of prorated interest. And basically what it is we have a closing date of 3/26/2012, okay? Mortgage interest is always billed in reverse. So basically for example, your April payment is for the month of March, and your May payment is for the month of April. Your June payment is for the month of May. So because we're closing in the middle of the month, the billing cycle won't start until April 1. So that's why in this instance, the buyer's having to come up with a few days of interest at the time of closing, prepaid through the end of the month, because the billing cycle won't start until April 1. And his first bill in this instance won't be until May 1 for the month of April. So this issue of prorated interest is not a fee. It's simply something that is going to be adjusted based on when in the month you're going to be closing. Okay, so we have these lender fees here. We also have a lender credit of $690. And again, any credits from the lender, any credits from the seller are going to show up in the credits column. Okay. Then we have a property taxes that are due from the date that the buyer takes possession through the end of the tax year, which the tax year is split up in two halves. One is from January 1 through June 30th, and the second half is from July 1st through December 31. So The buyer's taken possession on 3/26, so he owes taxes from that date through that half of the tax year. Couple of other items of note here. Seller reimbursement for owner's title policy and transfer tax. There's two policies involved in a transaction, two title policies involved in a transaction, and in most cases, the seller is going to pay for what's called the owner's title insurance. I've seen very few instances where the seller does not pay for the owner's title. In most cases, they do, and also the transfer taxes. Sometimes in the instance of new construction, new condo developments, the developer makes the buyer pay for the transfer taxes, but in most cases, the seller picks up these two items. So what we see is it actually is canceled out. So the buyer's being charged down below $11.52 for owner's title, but then there's a credit of $11.52 to offset. Same goes for transfer taxes. If you follow the cursor, there's a $2.42 debit to the buyer, and then there's a $2.42 credit to offset. So this is very common, and it'll show on your contract whether or not the seller's paying for these items, but in most cases they are. So in any case, we have escrow fees here, and then we have title insurance fees here. The lenders, it should be pointed out that the lender's coverage in this instance of $483, this is the title insurance policy that the buyer pays for. And then the $11.52 is, again, what the seller covers. We've got some recording fees down below, and then we have some other settlement charges. In this instance, there was an HOA involved, so there were some HOA fees paid, and also it should be pointed out the homeowner's insurance of $600. Here's how homeowner's insurance works. You do pay for the entire policy at the time of closing, and then you're covered for the next 12 months. After 12 months, the policy is renewed. So you're free to shop around for any insurance carrier you'd like, but just be aware that the insurance is billed at upfront at the time of closing, and then you're covered for the next 12 months, and then the policy is renewed. So it's important to note at the bottom, we see a balance due of $48,808, okay? So what this means is, at the end of the day, after the $5,000 deposit was made, we have a new loan in place, we've got some lender credit in place, we've got the seller reimbursement for the fees that the seller's paying for. At the end of the day, the buyer has to bring in $48,808.82, okay, to basically cover all of the fees that are their responsibility plus their portion of the down payment. In this instance, it was 20% down, so this is the remainder of the down payment plus the fees. This number is going to be given to you towards the close of escrow, and it's your responsibility to get that money into escrow either via a cashier's check or a wire transfer into escrow from your account. So in case you're wondering, how do I know how much money I need to bring in at the time of closing? Well, you get a statement like this from escrow that breaks down everything step by step, and then it'll tell you how much left is owed for you to bring in. Okay? So that's the buyer's settlement statement. Pretty easy to follow kind of once you get the hang of it, once you understand the concept of debits and credits, and you know that the seller is most likely going to cover some fees, and you know, hopefully this will be pretty easy to follow. The other document that we wanted to just quickly touch on is the settlement statement, the HUD-1, as it's commonly referred to. And the HUD-1 shows, as you can see, the borrower, the buyer's side of it, as well as the seller's side of the transaction, okay? It just so happens that on this one, there is no information for the seller on this one, but the format's the same. And the format of the HUD-1, unlike the buyer settlement statement, the format of the HUD-1 is standardized. It's a standardized form. It's always going to look like this. So it's not as, you know, it's not as pretty to me. It's kind of busy. There's a lot of lines. The type is really small. It's a bit hard to read, but the information is basically the same as the buyer's settlement statement as far as the buyer is concerned. This is a different transaction. In this transaction, we have a sales price of $650. We have borrower's settlement fees of $12,645. Going down a little bit further, we see that the loan amount is $520. In this instance, the deposit was $19,500, and then we have closing cost credits from the seller. The seller is giving the buyer a credit of $6,000 in this transaction. There's other credits of $500, $2,000, and $500. It's a lot of credits, which is great if you can get it. A little bit unusual, but those are the credits. And then we see this 2515 credit, which we'll get to in a few minutes. Again, we have some taxes that are being credited. This is actually a credit from the seller to the buyer. What's going to happen is the seller is going to credit to the buyer all the taxes from, let's say, January 1 through the time that they sell the house. And then the buyer is responsible for the entire tax year payment. So basically, the seller is paying for his portion, and then the buyer pays for their portion. You just have to think in terms of prorated taxes, prorated interest. There's obviously going to be a time when in between a month that the buyer is going to take possession, and there's going to be some prorated interest and some prorated taxes that just get assessed. Again, here on this HUD-1, we see cash from borrower at the bottom of $111,428 to close the transaction. This is, again, basically just the remainder of the down payment plus all the fees that are due. The second page of the HUD-1 does give you a detailed breakdown of all the fees. Here we have lender fees. Okay, we see a breakdown of $1,465 plus the buyer chose to pay points of $1,300 plus the appraisal fee. So here are all the lender fees. We also have some prorated interest, again, because we're closing on the 6th and the billing cycle doesn't start in this instance until April 1. The buyer has to come in with those 25 days of interest at closing, and that amounts to $1,500. So in this instance, billing cycle starts on 4/1/2012. His first payment's due on May 1, 2012. Again, the May payment for the month of April's interest. Here we have homeowners insurance payable to Allstate for the 12 months. This is an important point. So on the HUD-1, line 1101, title services and lender's title insurance, this is actually escrow fees and title insurance fees lumped together. Okay, so they put title insurance and escrow in one box. Then we have the owner's title insurance of $1,800, which the seller is going to pay for. Moving down, we see transfer taxes of $715. Again, the seller is going to pay for these. These are the second half taxes that, again, the buyer is going to pay for. The seller credited the buyer for a few months of taxes that was the buyer. The seller credited the buyer for a few months worth of taxes that were the seller's responsibility. And then here we see the buyer being responsible for the second installment 2011-2012 taxes. Now, the last point I want to make is we have an estimated a refund or a pad / cushion. This $750 is a pad. It's basically an over-collection of fees from escrow. And every escrow company does this, and the purpose is to avoid being short at the time of closing. So the escrow company is always going to over-collect from you, and then typically you get the entire amount back as a refund. One last point. We see on the last page here the addendum. This is showing the buyer's offset owner's title policy and offset for transfer taxes from the seller. This is the seller credit for these items, okay, that the buyer is being credited for. I hope this was helpful. Thank you so much. If you have any questions, please call me anytime, 818-421-4737, 818-421-4737. Thanks so much.